everyone, Buffy here, and I'm back with the third episode of the weekly Market Insight series, coming directly from the capital markets trading desk at SunWest Mortgage Company. Market volatility continues, so no doubt it has been a busy week. So let's get into it. As the central bank scrambles to get a grip on inflation, the prospect of slower economic expansion, banking sector turmoil, alongside inflation and sales data led to an anxious mood in the markets. Treasury two-year yields plummeted to their lowest level this year as government bonds surged in a rush for havens, with investors betting the collapse of three U.S. lenders will compel policymakers to halt monetary tightening. President Biden said he would ask Congress to strengthen regulation of the banking system as he sought to reassure the public about the state of the U.S. financial system after the collapse of Silicon Valley Bank and Signature Bank, which raised fears of a full-blown banking crisis. Federal Reserve Chair Powell faced growing calls from key lawmakers and regulatory experts for an independent investigation into the collapse of SVB and not just an internal review by the Fed board. So what is underneath the surface of all of this? Well, U.S. consumer prices rose by the most in 5 months in February, forcing a tough choice for the Federal Reserve officials, weighing still rapid inflation against banking turmoil in their next interest rate decision. The consumer price index, excluding food and energy, increased 0.5% last month and 5.5% from a year earlier. The overall CPI climbed 0.4% in February and 6% from a year earlier. However, the PPI report, which is a measure of wholesale prices, reported just a day after the closely watched consumer price index showed broad-based and persistent inflation. U.S. producer prices unexpectedly declined in February, pointing to an easing of cost pressure. The producer price index for final demand fell 0.1% from the prior month and increased 4.6% from a year earlier. The U.S. retail sales fell in February after a surge in the prior month, suggesting consumer spending, while holding up, is also getting challenged by high inflation. The value of overall retail purchases decreased 0.4% after a revised 3.2% advance in January. Applications for U.S. unemployment benefits fell last week by the most since July. Initial unemployment claims decreased by 20,000 to 192,000 in the week ending March 11th. Continuing claims fell by 29,000 to 1.68 million in the week ending March 4th. The European Central Bank raised rates by 50 basis points to 3% from 2.5%, while saying that inflation is projected to remain too high for too long. So let's get right into how the housing market is doing. Okay, MBA mortgage applications index rose 6.5% in the week ending March 10th after rising 7.4% in the prior week. Mortgage applications rose for a second consecutive week. Purchases were up by 7.3% after rising 6.6% in the prior week. Refinance increased 4.8% after rising 9.4% in the prior week. New U.S. home construction increased in February for the first time in 6 months, led by a surge in starts of multifamily projects and suggesting the housing market may be starting to stabilize. Residential starts rose 9.8% last month to a 1.45 million annualized rate. Applications to build climbed 13.8% to an annualized pace of 1.52 million units, reflecting gains in permits for both single-family and multifamily projects. Okay, let's wrap it up. Okay, so the Federal Open Market Committee is now expected to raise rates by a quarter point at its March 21-22 meeting and at its next two gatherings to a 5.25 to 5.5% range. Chair Jerome Powell hinted last week at an even more aggressive stance, and by that, he clearly pointed to a half-point rise. However, after the recent distress in the banking sector, the scenario has changed. Fed members will go in the blackout period ahead of the FOMC decision due on the 22nd. Well, that's all we have for the current week, guys. Please, as always, join us next time to get more market updates and decisions of FOMC's monetary policy. As usual, stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Happy Friday, everyone, and an even better weekend. Buffy, out.